Peter Dwardwick, thank you for coming on this morning because this could be playing into what we're seeing with the markets right now. I mean, who knows? How would you characterize the state of U.S.-China relations right now?
Thanks for having me, Brian. Listen, we are witnessing what it means to be in a real battle for dominance, and it is having a whole of society impact, especially a societal impact on how businesses can transact in cross-border relationships. I'll tell you, the tech sector, unlike any other sector, in the knowledge-based economy is squarely in the targets of both countries, looking to try and cement their dominance, continue to build, grow, innovate, and protect their technology sector. And Brian, it will impact every aspect of how you do business, where you do business, and what you can invest in as a business.
Well, it feels, Dwardwick, like that's going to be the great tech wall of China, if you will, right? I mean, I feel like there's almost two internets that are being built, if not already built, around the world, which is China, which has its own controls, largely its own companies. You know, there's no Twitter, there's no Google, and then you've got the rest of the world. Do you see that just getting worse, or is there something that our administration, their administration can do to bring those together, or do we even need to do that?
That's a good question, Brian. Look, I've been saying for a while now that the relationship right now, which is really based on a strategic mistrust of the intentions of the other, really needs a mechanism for managing us through this turbulence. What you raised about the internet, I think, look, many people fear that we may be heading towards a balkanized internet, a China-based ecosystem and a West or US-based ecosystem. And this is not good for anyone. And I suspect this is going to be one of the key things that we try and discuss when we can get that dialogue mechanism in place.
And it matters because for years, and you're a long time, senior policy and official around the world, we talked forever in the markets about, well, don't worry because we're gonna have access to 1 billion Chinese consumers that are growing toward an upper class and a middle class, and their purchasing power and their buying power is going to provide the next leg up for U.S. companies. There are many doing well. General Motors, for example, selling more cars in China than they do here. But outside of that, Dwardwick, it is looking increasingly unlikely that U.S. companies are going to have access to a lot of those consumers, which we talked about for a long time.
I think you're right. Hey, listen, I think it's important to note that we want our businesses to do well, but China has its own businesses, and China wants its businesses to do well, particularly in the Chinese market, but increasingly even in third markets that compete with the U.S. So I think if you had a long-term assumption that you were going to dominate the Chinese market as a Western company, particularly as a tech or knowledge-based company, I think it's time to readjust some of those assumptions, Brian. What we're seeing is that there is a battle in China to become less dependent on Western companies, Western investment, Western technology, and the Chinese want to really amplify its own businesses in its home market. So, yes, I think some companies will do well. I hope they will do well in China. But a 30-year plan to dominate the Chinese market is not good in this strategic environment. It's not going to happen.
Shepard Smith here. Thanks for watching CNBC on YouTube.